Dear learners, welcome back to your education channel Learn and Educate, where we are studying a few basics about the goods and service tax law. Continuing that series now under section 2 clause 22 Cess, defined under Central Goods and Service Tax Act 2017. Cess, it means the cess which has been assigned to it under the Goods and Service Tax Compensation to States Act 2017. Under this, there shall be levied a cess on such intrastate supply of the goods or services or both, which has been provided in Section 9 of Central Goods and Service Tax Act 2017, and on such cess shall be levied on such interstate supply of goods or services or both, which has been provided under Section 5 of the Integrated Goods and Service Tax Act 2017, and it shall be collected in the manner which has been prescribed on the recommendation of the GST Council for the purpose of providing compensation to the states for the loss of revenue which has been arising on the account of implementation of goods and service tax with effect from the date which has been provisions from the Central Goods and Service Tax 2017. It has been brought into force, that is for a period of 5 years or for such period which has been prescribed on the recommendation of the GST Council. But as such, the effective date of Central Goods and Service Tax Act 2017 was from 1st July 2017, and this act shall come into force for a period of 5 years or for such extension period, any period which has been prescribed on the recommendation of the GST Council. And as per that, the cess shall mean the compensation to the states. It will be levied on certain goods and services under Section 8 of the GST Compensation to States Act 2017, and it shall, in addition to the tax which has been made supplied, that is where CGST plus SGST on the intrastate supplies and IGST on the interstate supplies, a GST cess is also to be levied on the supply of certain goods and services. And some of the features, like it shall be levied on interstate as well as intrastate supplies transactions, since because there has been losses on account of revenue for the implementation of GST in the country. It is levied to compensate the state who is suffering any loss of revenue due to implementation of GST, and it is recommended levied for a period of 5 years from the date of implementation of the GST, and it may be prescribed on the recommendation of the GST Council. At present, it is for 5 years. It, as per the schedule to the Central GST Compensation to States Act 2017, it is levied on pan masala, tobacco and tobacco products, cigarettes, coal, briquettes, ovids, and similar solid fuels which has been manufactured from coal, lignite, but this excludes jet and pet, aerated waters, motor vehicles, and other products which has been prescribed.